the way that I always think about this space is you always have to start off at the Facebook level. The first subscription customers that we have did like cockroaches on subscription. We had Komodo dragons on subscription. Holy crap. We owe $1.5 million in payroll. I think we realized we were flying very close to the sun.
Yeah.
I was like living in a super cheap 1-bedroom apartment. This market doesn't make sense.
We were like, why aren't we growing? The answer is because none of our customers are growing.
And you're like, holy crap, I've overhired here.
Yeah.
Fundamentally own the category of subscriptions. We truly believe that a lot of the biggest, most successful brands haven't even been started yet. You know, I actually went to the hospital twice because I thought I was getting a heart attack. Every day I wake up and I look at my merchants' revenue and how they're retaining and growing because that's my lifeblood.
You don't need $500 million to go and build a software tool ultimately. My personal view is that I don't think in a few years' time, a lot of people will be logging into your dashboards in any tool.
If you want to like find a 10Xer, it's rarely outside of your company.
I want a later to grow, of course, but I have other things in my life I care about as well. Okay, cool. Well, let's start off. So thanks for coming on the podcast.
Of course.
We've been chatting over the years and I've really enjoyed actually some of the content you've done on LinkedIn the last 6 months. So like, you know, more real about what it's like, founding a business and trying to scale it. I guess perhaps that would be a good place to start is the sort of the journey of the last few years. So I think, you know, when we first met, you know, it's very much like bootstrap heroes. You're all here in Santa Monica, small team. You know, profitable and growing. And then there was a kind of inflection point right in 2021, was it, when you raised the venture round? So kind of what was the trigger point from kind of moving from that, like we're bootstrapped and fine to we should take the money? And
I would say, you know, we started Recharge about 10 years ago, right?
Yeah.
And at the time, Shopify was like super small, right? It was just like micro entrepreneurs. There was only like 100 or so people at Shopify when we first got in. We actually had an agency before that, but you know, 10 years ago, we started Recharge. So it was a very different place, right? And at the time, you know, we started a development agency called Bootstrap Heroes because we loved working with entrepreneurs, builders, and creators, right? And we thought commerce is going to be this big wave. We're going to ride it. We want to be part of that, right? And when we had that agency, we had this realization that we wanted to build software, right? And we wanted to go after what we thought were the bigger problems in the space. And, you know, so we actually started to launch lots of products at that time. And we launched 7 products and Recharge was the 7th product.
Cool.
And the insight there was...
What were number 1 to 6? What were number 1 to 6 as a quick...
You know, we actually did like an email tool.
Yeah.
We accidentally email spammed a lot of people. So that was the death of that one.
Okay.
We did an SMS tool early. It was super early, way too early for SMS. Yeah. We did like pop-ups. We did the first pop-up app on Shopify, which is hilarious. Wish list, loyalty. So we did all sorts of things.
But payments, subscriptions felt like a meaty problem to solve.
Yeah, and it felt like, you know, there was a group of customers that didn't want to sell to someone one time, but ongoing. And subscription was a vehicle to retain that customer.
Yep.
And all the tools out at the time had been built for software companies, right? So it was like Stripe or Chargeify or Chargebee and all these other tools. There was like 8 different tools in the Shopify app market. So we were like, hey, we're going to build this just for physical products, subscriptions. And it just took off like crazy. And so that was kind of like the humble origins, right? And like the way that I always think about this space is you always have to start off at the Facebook level because it's almost like the lifeblood of whatever gasoline or energy into the system, right?
Yeah.
So Facebook at this time had just launched like their advertising network.
Yeah.
And so it allowed these small businesses to start to scale, right?
Yeah.
And that's kind of why Shopify was so small until that emerged as a distribution channel. So anyway, so that happened. And so let's say like that was like phase 1 of Recharge. Phase 2 was during, you know, let's say 3-4 years into that journey, the distribution channels of Facebook got really good, right? So you had the emergence of like lookalike audiences, all that kind of stuff, more programmatic of it. It would just figure out who to show the ads to. And that kind of accelerated the market again, right? And so that was like, it was during that phase that, you know, we basically had bootstrapped it because no one would give us money.
Sure.
And there was no reason to raise money because you're like, I don't even like...
What would I do with more?
What would I do with it?
Yeah.
It wasn't even clear with like Shopify going to be a public traded company and how valuable that would be. Like people don't realize when Shopify first went public, it was only worth a couple billion.
Yeah.
Luckily, I put my life savings in it at that point, but I thought I could be bigger. And like it's 100x, right? It's crazy.
Yeah.
And so, just like even if we wanted to raise money, it couldn't have been possible.
And as you said, it wasn't the story that this is going to be a huge market. There were some brands starting to emerge, but But at that point, Shopify definitely hadn't captured the sort of the bigger. It was a channel for people who were only trading D2C. You'd never have considered it as some of the brands on the wall would never have considered it as a channel, right?
No, yeah, it was just super small. Yeah. And even the merchants on there, a lot of them were very unique businesses. Like the first subscription customers we have did like cockroaches on subscription. We had Komodo dragons on subscription. We had like probably illegal liquids on subscription and things. So it was all the things on the fringes that you would expect from an emerging group, And
then just, I guess, before that bit, pre-COVID, it then started to get serious. Okay.
Yeah. So pre-COVID, it started to accelerate, right? And basically, that was the point where you're like, oh, wow, this could be a big market, right? There's a big opportunity here. And it felt like at that point, you were like, wow, it feels like Shopify has that potential to become the operating system for commerce.
Yeah.
And in that, we are like, oh, wow, we own this like subscription widget or, very simple subscription tool. We could build a subscription platform, right? To help people, use our APIs, SDKs, all these things to customize everything. We build an app market so that our tool integrated with all the other tools at that time. And so the business kind of, was already doubling at that point, and we were at scale. And then COVID hit, and it just kind of accelerated things again on top of that. And so we were at a point where, we were completely bootstrapped, and we were at about 20 million in revenue. But what we were doing is we were putting every single dollar back into the business.
Yeah.
And there was a period where we had $50,000 in the bank, and it was a 20 million revenue business.
Yeah.
And what happened? There's this one month or specific day I still remember. It was like August of that year. I forget the year, but I remember August very specifically. And Stripe flagged our account for fraud.
Right.
So we had they froze all our money.
Yeah.
And we were like, holy crap. We owe $1.5 million in payroll in a week.
Yeah.
And we have no way to pay anyone.
Yeah.
And it was like a, existential moment. And at that moment, we realized two things. One, we needed to talk to the Stripe founders as quick as possible.
Yeah.
Or whoever at Stripe to release our money.
Yeah.
Which we did. And then second, I think we realized we were flying very close to the sun of like what the business needed from just like operationally.
I mean, I've been there the last couple of years, and I think running a business with less than like a couple of months of payroll in the bank is incredibly stressful.
Very stressful.
It takes one small hiccup in terms of late payment or something to derail you.
100%. And it's just like that stress eats away at you.
Yeah.
And then, I was like living in a super cheap one bedroom apartment, like I was just like, I got to like take some money out of the business. I got to add some money in the business just to add that. And at that point, it became clear that money would be a good servant for where we wanted to take the business and also ourselves,
But you ended up, punching high in terms of valuation and money. Was there a sense in which you thought, well, if we're going to raise any money, we might as well get as much as we can at this point in time? Was there thought that maybe we take less money?
Well, I think, at that time when we started raising money, the valuations were just so good and the terms were so good, right? You have to realize this is like 2001 is you were getting 36x on revenue, right?
And you already had pretty good revenue.
And we had really good revenue. Yeah. And also, this all stemmed from the fact that interest rates were like historical lows, where to the point where people thought we might have negative interest rates, So it was almost like free money. And I think a lot of brands also felt like this. They were able to get capital really quickly, which is turned very differently later on. So at that time, we were like, hey, this market doesn't make sense, like the valuations. We can get, good money off the table for ourselves, put good money into the business. So let's do that. And so we did do, at that point, we did about 270 million in fundraising.
Yeah.
But, the other thing was that both my co-founder and I owned a huge chunk of the business. So even with the fundraising, we still own the majority of the company.
Yeah.
We still control the board. So we had full control. So there wasn't a lot of downside.
No.
And I think that's also big in business is you have to always think about like what's the downside and what's the upside. And we were protecting our downside by doing this move, right? And giving ourselves more optionality for upside.
And as you say, if worst came to the worst and you hadn't grown at all, you'd just be left with a smaller share of already a fairly decent business.
Yes, exactly. And that we fully control, you know?
Yeah.
Now, we had more opportunities in that period to raise money. We actually didn't because it started to get too crazy where we were like, this feels like not wise to do.
Yeah.
And there's some peers of mine where I saw them do that where they over raised money or they over diluted themselves where it was very detrimental to the business. So I think we kind of went on that line, which was good.
Did you find there was pressure then from the new shareholders to sort of change the strategy, or was it quite hands-off in terms of we back you as founders?
We have great shareholders, great investors. They were always very much like, we'll back you, we'll support you. I think what was more detrimental was during COVID, there was this like acceleration of commerce where we were always doubling, but then suddenly we were 3Xing in a very short period of time. And we had to lean in, hire lots of people and scale the team. And, I think it's like, we were almost like, a teenager in a grown-up's body or something, like it was just awkward. Right. And I think there was a great interview I saw with the founder of Zoom, and he said the same thing. Yeah. Where like, and then, you hear the Airbnb guy, Brian Chesky said the same thing. It's just like everyone through that period felt like they had to prematurely scale. Or they were heavily, not Brian Chesky, but someone else said that too. They were impacted by this. And it was almost like you couldn't do anything about it because you just had this wave of demand and you have to service it. So you have to hire support people, you have to hire sales people, you have to hire marketing people, you have to hire account managers.
And then they all need operational people to help.
And we were all remote, right? Yeah. Nobody was in the office.
Yeah, because that's what I was going to ask. I think that's the really difficult combination, isn't it? Loads of new hires, but also no one's met each other. There's no sort of, because they say that at this point you weren't all in the office together. There's no sort of natural.
It was terrible, right? Everyone I know who was in that period all went through it. Yeah. Right. Yeah. And so, and what happened was like, so you had this acceleration, and then as soon as COVID ended, of course it went back down, right? You can see this in like, if you can look at basically the penetration of online sales to total US retail, the chart goes like this during COVID, and then right afterwards it just drops. Yeah,
there's a little bit. I mean, it's still in the long-term trend. It's still.
We've actually surpassed the level of penetration that was during the height of COVID. Yeah, so we've actually done it, but it went like this. Yeah, and then it kind of went. Yeah.
The really interesting graph I saw was actually from a Shopify investor presentation last quarter, which was it was a cohort of brands who joined Shopify in 2015. Yep. And over the 10 years, you can see that just for the actual cohort, their revenue just flatlines and dips a bit. And so 2021, massive step up. And then basically 324 just flat. And that really opened my eyes for me because we experienced that as a business. Yeah. Like we were like, why aren't we growing? The answer is because none of our customers are growing. Like they're all struggling too. This isn't like a sort of I mean, don't get me wrong, we made some mistakes as a business, but like there is, as you say, a wider problem here.
Yeah, 100%, right? And again, back at that period of COVID is like everybody was stuck at home, everybody was on Meta, clicking on ads, buying there, and then afterwards they weren't, and so brands were impacted, technology partners were impacted, agencies were impacted. We're all like in the same ocean.
So you talked recently about kind of getting to this point where you were burning, I think, like $9 million a month, like crazy, sort of felt like there wasn't control. And you had to sort of reset, change, lay a few people off, reset the leadership team. What were the signals for you that something was going off track? What were the sort of cultural signals that it wasn't right?
Yeah, I mean, like, it was kind of like, it was a really hard period, right? Because you like leaned into this thing, which was, everyone said it was the right move, right?
Yeah.
And then
fantastic, you raised those money,
totally,
you're a hero.
And then suddenly it all just flips overnight, right? And you're like, holy crap, I've overhired here. Yeah. I'm burning way too much money.
Yeah. You're expecting the 3X again, and then the revenue will catch up with costs pretty quickly. And
all my merchants, they're struggling too, right? Yeah. And then their needs of what they needed were changing very rapidly as well, right? And I think in that period, we started a lot of things. One, we realized that some of the people we hired weren't the right culture fit, on a leadership level, on an individual level. Two, we realized that the very structure of the company needed to be reset because we've been reset for this like rocket ship period and that had changed. And then three, I think we also realized like we had been in this period, we had been building this like subscription platform, and it was quickly evolving that merchants were going to face a tougher period, right? They were going to have less access to capital because of high interest rates.
Yeah.
They were going to have more competition for eyeballs because of how many merchants were created in a very short period of time to compete. Yeah. And we realized that they needed the best partner to increase the revenue of their customers they do acquire, right? Yeah. Fundamentally. And I think
so that's less acquisition, more focus on retention.
Exactly. And that's when we realized like we need to become the best retention partner for them, not just a subscription platform for them.
And did you also discover that period that you kind of, from a point of view, retention of your own customers to your own churn, that you needed to maybe work with a bigger merchant to solve the more complex technical problems?
No, we did go up market, right? And that's still like been a big success for us, but I think fundamentally we believe, or not believe, we fundamentally own the category of subscriptions, right? For physical products. So when you think of like physical items on subscription, probably 70% of them go through us, right? And I think, what our mission really is to help these brands and builders retain their customers better, right?
Yeah.
And I think because we do that, we want to support the next big startup or the next exciting group of people putting something together, as well as support, the classic big companies that you hear about on the platform, right?
But as you say, your strategy is to be a product leader. You don't want to be a sort of, you're not competing on price, or you want to be seen as the best solution for physical.
Yeah, I mean, we want to be seen as the best partner.
Yeah.
To help you retain your customers, right? And we believe that has value, right? And so when you look at us today, it's like, yes, we bring on, brands that are doing billions in subscriptions, but we also launch thousands of merchants every month onto the platform, right? Yeah. So it's more the gamut, because we truly believe that a lot of the biggest, most successful brands haven't even been started yet. So we want to like support everyone in that journey from subscriber one to your millionth subscriber.
So just going back to that period, and I think we're talking about 2023, when there was this whole like crunch of like, we're not on the path we thought we were on. We need to change track. How do you bring? You started the business lean, very much in founders in control. It wasn't like you were ever sort of change management. But how do you therefore bring the culture back to being that sort of?
It's super painful, right? Yeah. Like I had this moment like for like a year where I was literally getting panic attacks every single day. I'd get them multiple times through the day. And I just had a moment where I was like, I actually went to the hospital twice because I thought I was getting a heart attack.
Like racing heart and just
and just like, and what had happened is I had gone too long under a period of high stress. Yeah. And my nervous system had been fundamentally over. Yeah.
But also maybe this is, I personally remember you have this inner conflict where your gut knows that this isn't the right course.
Exactly.
You kind of, everyone's telling you, hey, you're doing well. Like this is, you should be carrying on, but it's not right.
And so there was a moment where just like the dam broke and I just like leaned in and I just like woke up one day and I'm like, I'm going to change everything.
Yeah.
And I just like went on a warpath. Like literally every day I'd wake up at like 4 a.m.
Yeah.
And I just worked my ass off to like 9 p.m. and just went back to bed.
Yeah.
And basically I ended up letting go of like probably 70% of our leaders. I ended up, letting go 25% of the company.
Yeah.
I ended up resetting the whole product and vision of the company where I wanted to go. I ended up resetting like how would we measure success, and how, fundamentally building on this idea that we're going to measure success based on how much we help merchants grow from a GMV perspective, and how we help them retain customers.
Not just how much we grow as a business.
Exactly. I didn't care about revenue. I don't even look at our revenue today, really. Is every day I wake up and I look at my merchants' revenue and how they're retaining and growing, because that's my lifeblood with them. It was really painful. And it was painful because a couple of things is, one, as a founder, I got to this level of success, right? Quote unquote, had created a unicorn company. I had, hired all these people, a lot of them really good people, And I had to be like, actually, this isn't working, and you care about people, right? You want to do right by them. And it's really hard when you have to be like, but I have to like, there's like a priority stack. And unfortunately, the first priority is like make recharge work, right? And then it's like take care of the customers. And then it's like, take care of the customers comes first, actually. Sorry, because that's how you take care of recharge, and then take care of the people part of recharge. But like, it was just kind of going through all that.
And then take care of you.
Yeah, your success is a byproduct of taking care of the customers and taking care of the people you work with.
Yeah.
Right. And so anyways, it was just really painful, and it was really hard. And I had to like strip my ego and reinvent myself too, a little bit of like where I found value. How did I value myself? What did I find? And I probably didn't have any good boundaries of work and life and identity. And I kind of had to rethink all those things as well.
Did you find that when we reached that leadership team, 70% left, did you find the people left were the ones who'd been there for the beginning and kind of knew the culture more? Or were there within them, when that period of rapid hiring, there were gems within all of the rest of it? I mean...
Yeah, no, there was like... It was interesting. I mean, we had a lot of great people early days, right? That, were bedrock of our success. But I think, at every stage... there's new challenges. And I think that there's a group of people who reinvent themselves for that new challenge period. And there's people who just like, isn't the right place for them.
Yeah.
Right? And so I think
sometimes the business outgrows them. Sometimes people.
Yeah. So I think there was a small subset of great people who had been with us from the beginning that rose to the challenge. Right. So that was one group. And then I think too, is like, there was a lot of gems, and they weren't like, a lot of them were like, more IC or lower levels that just like leaned in to adversity and leaned into the things. And I think, it kind of accelerated their careers too in this period of time. So
well, obviously, sometimes when you do a reset, there's opportunity for these people to shine through, and they're, you pile more on their shoulders, and they prove they can do it and even more.
Oh, 100%. And like, I think if you want to find a 10Xer, it's rarely outside of your company. It's usually somebody internal, because they understand the product, they understand the customer, they understand the culture, like how to get things done. And they oftentimes have like the hunger to really push themselves and make that impact. While people use it external, a lot of times they're not as hungry or as knowledgeable of how to get things done within your particular setup.
And do you remember any particular kind of messages or something you're pushing to the company, you like to signal like this is really a fundamental change? How do you get across that like message that this is not a small course correction, this is a reset?
I mean, I think just trying to be as transparent as possible, right? Like, hey, here's what's going on in the business. Like at that point, we were seeing like our revenue decelerating. We were seeing our churn was going up.
Yeah. We
were seeing that people were struggling. Our brands were really not fully happy with us for multiple reasons. And in that reset, after we reset it and we would say, hey, we're going to be the best partner to help people retain their customers. 3 years later now, in that period, our churn is like at a 4-year low. Our GMV is like a 4-year high of growth. So like we've completely but you have to be like transparent in the moment of why things aren't going well and highlight that, and highlight a distinctive plan of like how you're going to change things. But it takes multiple years to get there,
What about the Venture Investors Summit who came aboard? How do they feel about that? Do they think that was a sensible move? Do you have to like sell them that this is what I want to do? Or?
I think in that period, everybody was resetting.
Yeah.
So that was one benefit we had.
Yeah.
Is like
you weren't the only one.
Everyone had built these business models and these businesses and raised a bunch of money, and then the world changed and they all had a reset. Like I don't think you can talk to one brand, or other technology partner that didn't have to rethink things, So I think that really helped us, is like what we were going through, a lot of other people were feeling as well, And then I think, our investors were really good supporters. Like they want, they appreciated us taking that courage and that leap of faith of like, hey, here's where we got to go, and we're going to put the company on that.
But presumably you hadn't burned through that whole chunk of capital, so you still had a fair amount.
No, yeah, we had quite a bit too,
So were they supportive just holding it there, or was there some pressure like you need to just keep, spend it on something to try and find growth?
No, they were like more like, hey, we should conserve this for a rainy day. We should, try to find how to become more efficient, And I think like, that previous era, let's say 2021 or before, it was kind of like grow at all costs.
Yeah.
I think that the zeitgeist has moved to like, hey, you can actually be way more efficient and more impactful with smaller groups of people who are more focused, all that kind of stuff.
Yeah, I mean, I see it most recently, I think it's slightly flipped back to the kind of, with some of the AI startups that are raising crazy amounts of capital to invest in something that's fundamentally not very capital intensive. It's still, I get that people are actually building data centers, that's different.
Yeah.
And I'm talking about people who are, building software that is, you don't need $500 million to go and build a software tool ultimately.
Yeah, I mean, but you have to realize is when you see these numbers, you don't know how much money they kept in the business and how much they took off.
True.
Right?
True.
So,
yeah. That's the total amount that got spent. So let's talk a bit about the product. So you talked about Recharge wanting to be more of a retention platform for subscription merchants, not just to help them actually facilitate the first sale. I mean, how far do you go with that vision? I guess two things come to mind. Like, to what extent can you be at the actual commerce operating system, and to what extent do they need Shopify as well? I know you have a few brands that are not using Shopify, but vast majority of them are. But also, like, where else does that take you kind of product-wise in terms of features? I mean, beyond subscriptions.
Yeah, I mean, well, first is like, I think, we see Shopify as kind of like the operating system for commerce. Like, that is the underlying platform that everything's built on, including us, right? So I think that's the first thing. I think, in that mission of helping brands retain their customers, right? That's almost like a forever mission, right? It's like there's no end to that, right?
No.
People are always going to need more things to help retain people, right? I think the things that we've been investing a lot in over like the last couple of years is like, one, how do we provide better like loyalty tools, right?
Okay.
To basically incentivize people to stay in their subscriptions and incentivize them to repeat purchase. So this is things like credits and free gifts and tiers and all that kind of stuff. So that's like a bucket. I think we've invested a lot into automations also around how do you upsell and cross-sell people, right? Like, how do you convert them into these programs? How do you basically move them from one level buying one product to buying multiple products? So I think that's another thing. And when you think about upsells and cross-sells, you can think about the product page, you can think about the cart, the checkout, the post-checkout.
Yeah.
You can think about the customer portal. Yeah. So that's a blanket of stuff. Another big area that we invest in is analytics, right? How do you give them better understanding of the lifetime value of customers? What is driving retention? What isn't? That's a big area. Area we're very excited about is we've started to add more, touch points around communication, right? So we've launched a subscription support tool so people can manage all their subscriptions really easy via SMS.
Yeah.
So I think this is going to be kind of like the theme for us more and more is like, how do we become that great retention partner and platform for the merchants we serve with subscriptions at its core? Because that is the best way to retain customers.
Have high lifetime value. Yeah, no, it makes total sense. What I guess getting back to the Shopify point, what is it that you think you could never? I mean, is there a certain type of merchant that maybe doesn't need all that other Shopify functionality? Because obviously there's a certain maybe pure subscription business that ultimately they just need a process to take the payment and manage the recurring payments. Or do you think in most cases, like inventory, all this other stuff is something, it's well outside of what you do? Because you do have a few brands that are not using Shopify, right?
Yeah. But it's a sliver of the business. Our focus is Shopify, really. Yeah. I think what I see is that Shopify continues to consolidate commerce, right?
Yeah.
And it's just built the best underlying infrastructure for commerce brands or commerce technology providers like ourselves.
Yeah.
I see that because they're getting so good at, if you're going to sell any end consumer, you probably want to look at using Shopify. And that's not even just physical products. We're seeing more and more digital products. I just got off the phone the other day with an RV company.
Really?
They do like an Airbnb of RVs.
Yeah.
And I'm like, well, you're going to do, memberships on Recharge, and you do credits and all this stuff, which is interesting. But I'm like, why Shopify? And what they're saying is like, well, we have this huge team, but we have to build out integrations into TikTok, to Facebook, and into ChatGPT to sell consumers and to have a checkout. And they're like, it doesn't make sense. It's easier just to use Shopify as that commerce platform to sell the end consumer than build it all ourselves.
And I guess the other side, you've got the sort of B2B market that Shopify increasingly trying to open up.
Exactly.
Lots of opportunities with subscription products there.
Yeah. So I think we're a long-term bull just like I was in like the first IPO of Shopify. I'm a long-term bull. I think that through line of Shopify being the operating system for commerce will continue. And I think from our mission of like helping brands and builders kind of retain their customers, we need to be the world class at that. And that's a very focused area.
So I know you guys aren't obviously in fundraising mode the last few years, but obviously at the moment there's a lot of pressure if you're trying to raise money as a B2B SaaS company to have an AI story. Like, what is your AI? What are you AI first at? How do you think that applies to Recharge's product? What is it that AI unlocks for your product, or what are the opportunities to invest in there?
Yeah, totally. I mean, look, I think like AI is like getting baked into every product, right?
Yeah.
It's just so helpful, right? And for most, or at least almost every product, right?
Yeah.
So I think that just every company has to have that. Right?
Sprinkle it on. I mean, I always like Myers Clavier's approach to AI with their product strategy. So it's not like we have an AI feature. It's like everything is just a little bit enabled.
Yeah, everything starts to become more and more enabled with AI, right? So an example is like our analytics and reports. So, we have really comprehensive dashboards and reports about everything around subscriptions and LTV and how many people are you converting into a subscription and then what happens afterwards.
Yeah.
But, historically, you would have to log into Recharge and you would have to go and look at all these reports. You would have to like compare them.
Yeah.
And, and that was a bunch of work, right?
I mean, you have to know what to look for in the reports.
Totally. And you have to become an expert in subscription analytics, which like a lot of people are just not, right? And so we launched subscription AI agents that actually go in and tell you weekly or monthly what the going on and what you should do. And they make it in a very succinct way for you to understand your data and how to think about it. So that's a big area that we are investing in to just help brands understand like what's going on, right? And meeting them where they are at. It's not trying to be like, hey, you have to come into us, but being like, hey, we'll shoot you an email. Probably in the future, we'll send you Slack messages, right? And then I think the other side is we launched our, concierge, which basically as a subscription brand, the biggest challenge your customers have is to manage their ongoing subscription, right? And so we launched an SMS product where every subscriber will now get notifications via SMS and they can chat with the system in natural language to be like, oh, I'm out of town next week. And then the system just moves your subscription 2 weeks,
Yeah.
Or, hey, that flavor wasn't good. What are the flavors you got? And then makes recommendations. And so I think that's also an area we're very excited about is like AI communication to help the end shoppers better manage their subscription, better reorder from these stores.
Yeah, I mean, I mean, the whole sort of customer support thing is such an obvious. I mean, that's obviously where the fastest adoption of AI has been in SaaS, as far as I can see. But as you say, I think it's really interesting going back to your point about reports and dashboards. My personal view is that I don't think in a few years' time a lot of people will be logging into your dashboards in any tool. As you say, like I think the future is that you kind of want your AI agent of choice to be able to go in and to the tool themselves. So, if you use ChatGPT, you want ChatGPT to be able to answer like, how are my Recharge customers doing this month? So I think I know that's the whole MCP server trend at the moment. Maybe that's, or maybe not, the route for fulfillment. I mean, I think MCP servers have only really been around a year or so. So early days. But I do think that we're going to. I think fundamentally people don't want to log into 100 different tools to check how their business is doing.
I don't.
No, I don't. Yeah, sure. So I think that's the future, that AI can kind of be able to dive into all the different tools you're using and pull out what you need.
100%. Like that's what it is. It's like AI is going to work in the background and do things for you.
Yeah.
Like I think this idea that you're going to have to chat with the AI to do everything is kind of crazy. It's just not how people work.
No.
People just want you to be like, hey, tell me what happened in my subscription business last month. And what are the 3 things I should do?
Well, it's like I tell in a team, I don't want to have to ask you how it's going. Please report up to me. Like, how is it going? Like,
it's a lot of work that way.
Yeah, exactly. Cool. And I mean, are you as bullish for the future of Recharge as you've been in the past? I mean, you obviously went through a period where it was kind of almost fell out of love with it, right? When you're so stressed.
100%. I mean, like it was just that was a real period. And I think after the reset, I was like, okay, now I'm rebuilding the company where I want to go, with the people I want to do, with the impact I want to make on the world, right? To help these entrepreneurs, these builders. And, today, I was just saying, like, we've had the fastest growth that we had in like almost 4 years. Churn is at a low of almost 4 years. It's like everything is just clicking. And I think it started with that reset. And it's just really exciting to like looking forward to the next like 10 years of building this company with that purpose again that I felt like we had early days. And I felt like we lost a little bit in the craziness and then we regained. And I think now I'm going to cherish that and hold on to that in a very different way.
Yeah.
Apparently, you got to make some mistakes to learn a couple of things.
Who knew? Yeah, who knew? I guess the good thing is making a mistake with enough altitude not to crash into the ground.
Yeah, totally.
But also the other thing that happened in that period was, you started a family, right? You've got to
yes, and I think that also helped ground me too.
Yeah.
Right? It wasn't,
you got something else in your life to care about, right? So I think that changes perspective.
Perspective, exactly.
Yeah.
You're like, oh, wait a minute. Actually, there's things that are more important than just what you're building.
I got a real wake up call like last year, because I mentally in my head, I had like this period between my eldest son going to school, like age 5, and sort of that was my period to build the company into a sort of cash generative machine to be able to look after the family. And I suddenly went, damn, he's at school now, and like I didn't quite get to where I'd hoped to in 5 years.
Yeah.
Like it was a real like zoom out moment. But then I realized, hey, like I've done actually lots of made some mistakes, sure, but I've done lots of interesting things, and actually I want a little later to grow, of course, but I have other things in my life I care about as well. And funny enough, I think it makes you a better leader sometimes that you're not. There's a time and a place, as we both know, of like doing the 14-hour days and just getting stuff done. But I think it does give you this perspective that actually, if some stuff goes wrong, well, whatever, we'll live another day, and there's other things in life I care about.
Yes, I think 100%. It gives you that perspective, and I think it also, at least for me, I think I've actually become more productive.
Yeah,
because it's really focused me.
100%.
Like,
everyone says that you don't want to waste minutes of your day when it means basically you're later home to read your kid story or whatever. It's that's actually the time you're trying to create in your day. Everything else gets condensed into what I really need to do.
Exactly.
Yeah. Cool. Well, I think that's pretty much. That's been a good chat.
Cool. Awesome. Thank you so much.
Thank you for coming on.
Appreciate it.